It's a beautiful autumn day here in Seoul, and I'm Lee Ji-yoon. Coming up on today's edition of Business Daily. The U.S. Fed's decision to freeze rates for now drove up Korean shares today, and eyes are on what the Bank of Korea might do next. The road doesn't look too easy for some of the world's biggest multinational trade deals that are waiting to be sealed and inked. We talk about how growing anti-trade and isolationist sentiment is holding up these mega trade deals. The U.S. Fed Reserve has left its interest rates unchanged, but it did hint at a rate hike by the end of this year. And following the Fed news from overnight, shares traded in positive territory, closing up here in Korea. For more on the FOMC decision and what this means for Korea, here's our Hwang Ji-hye.
The U.S. Federal Reserve has decided to give its economy more room to knock out ashes from the last recession, although that was more than 7 years ago. The Fed kept its target rate steady on Wednesday at 0.25% to 0.5%. But it did express confidence about the economy, saying economic activity has picked up and the labor market has improved. Fed Chair Janet Yellen says the key to its latest decision was risks stemming from lack of inflation.
We all agree that the economy is making progress, that we are close to an unemployment rate that is one that's sustainable in the longer run. We all agree we are undershooting our inflation goal and that we want to make sure we stay on a course that raises that to 2%.
Given the mixed signals, the Fed was divided during this meeting, with 3 of the 10 voting monetary policymakers supporting a quarter-point rate hike. The dissents, analysts say, suggests a stronger shift towards monetary policy normalization before the year ends.
We would think that if they wanted to raise rates, they would want to support that. They would want to have a press conference afterwards to talk about that in full length. That next press conference is in December. If you look at expected futures and the expectations of that, it was at roughly 50% prior to today's meeting. It's increased slightly since then.
On the back of the Fed's rate freeze, coupled with BOJ's earlier decision to tweak its monetary easing policy, Korean shares traded higher on Thursday despite lurking uncertainties from Hanjin Shipping and Samsung's massive recall of its latest smartphones. While all this gives Korea's central bank more leeway to dive deeper from its record low key interest rate next month, analysts say there are other issues in the mix the BOK will want to consider.
Both the Bank of Korea and the government share concerns about the household debt problem. And considering that the extra budget is being implemented this month, the central bank will want to take some time to gauge the impact before it moves to cut rates.
Now, what market watchers at home and abroad are keeping close tabs on is the U.S. presidential election in November that's forecast to largely affect monetary decisions not only in America but also in other countries worldwide. Hwang Ji-hye, Business Daily.
And while Hanjin Shipping's biggest shareholder, Korean Air, is set to provide a loan worth tens of millions of dollars to the troubled container carrier, the state-run Korea Development Bank also seems to be mulling additional aid for the company. According to multiple sources in the local financial sector, KDB is reviewing whether to provide an additional $45 million to help Hanjin Shipping cover unloading expenses for ships that have been stranded at sea for weeks. Now, the extra funds that would reportedly use Hanjin's accounts receivable as collateral are likely to be confirmed in the coming days. Korean Air announced a $59 million loan for Hanjin Shipping on Wednesday night, which will help make up the $90 million emergency fund earlier pledged by Hanjin Group, the parent company of Hanjin Shipping. The court has ordered the shipper to submit a self-rehabilitation plan by November 25th. Korean companies logged their ninth quarter of negative growth in sales in the April to June period, with figures dropping an average 1.9% on year. The Bank of Korea analyzed data from over 2,000 businesses with assets worth over $10 million. It found that conglomerates slowed their pace of decline to 2.3%, while SMEs turned to negative territory, logging a 0.2% dip in sales. On the other hand, their profitability was up to 6.3%. It marks the best in 5 years, helped by a weaker local currency, cheaper raw material costs, and a boost in refining margins. But bad news for builders. Korea's construction sector is on alert as overseas orders may drop to the lowest level in a decade this year. According to the International Contractors Association of Korea, foreign orders came to $18.4 billion as of this Wednesday, just over half the sum from this time last year. Slow demand in the construction market is largely seen as the impact of low oil prices, putting a dent in orders from the Middle East. The protracted global economic slump has also resulted in fewer projects from countries in Latin America. The association projects overseas demand will likely stay in the slow lane unless oil prices rebound to $60 per barrel. In the final installment of our series on Korea's household debt, we'll take a look at why there's a real concern that the after effect of a massive debt pile could begin to rear its head as early as next year. Our Eunice Kim has the story.
The most pressing variable set to hit a nerve comes from Washington, D.C. A U.S. Federal Reserve rate hike could come, as many say, as early as December. And to ease massive capital flight, many see the Korean central bank being forced to do the same.
A U.S. rate hike would strengthen the dollar and raise risks of a capital outflow from emerging markets. If that's the case, we could raise the lower bound of our key interest rate.
In fact, we're already seeing that risk priced into mortgage rates offered by major banks. Interest rates have been inching up by 10 to 30 basis points since the BOK's base rate cut in June. By the end of last month, the lowest rates offered by one commercial bank were at 3%. Should the key interest rate rise, it would inevitably impact mortgage payments of many Korean households, those tied to a floating rate. With bloated, untenable payments, properties bought on debt would be forced to auction, leading to dropping asset values and weakened financial institutions. Higher payments would also suck up disposable income, leading to a cut in consumer expenditure. And as companies deal with falling sales, a vicious cycle could ensue.
A greater debt burden on vulnerable households will lower their ability to repay. In the bigger context of household debt, there's a high probability this will become the weak spot.
This is why the government says it's moving quickly to adopt the stricter evaluation criteria for new loans, from debt-to-income ratio to debt-service ratio by the end of the year. Then there's the political variable. The country is set to transition to full-on presidential campaign mode next year. As candidates raise their voices for regional development projects, demand for real estate could rise. And as there will be a time lag before the next administration finds its bearings, it will be up to households to make sure they aren't picking on more than they can manage. Eunice Kim, Business Daily.
Two mega trade deals, the Trans-Pacific Partnership or TPP and the Regional Comprehensive Economic Partnership or RCEP, are set to be facing strong headwinds, and many expect that it's unlikely that we'll see the two deals come into effect within this year. Take a look.
Our exports to South Korea haven't increased at all, but their imports to us have surged more than $15 billion.
I oppose it now. I'll oppose it after the election, and I'll oppose it as president.
Both U.S. presidential candidates have come out with strong skepticism about free trade. Trump has repeatedly criticized the Korea-US Free Trade Agreement, saying it's a job-killing deal for Americans, while denouncing other trade deals. Clinton, too, has vowed to oppose the already fully negotiated TPP, saying she'll do more than previous administrations to enforce protections included in existing trade pacts. U.S. President Barack Obama has been working on the TPP to ratify it within this year, but with both presidential candidates opposing the deal, experts say ratification by Congress is rather unlikely. Meanwhile, negotiations for the China-led RCEP are currently in a stalemate, with participating countries locked in a dispute over the degree of commodity, service, and investment market opening. Amid growing trade protectionist sentiment and isolationism worldwide, what lies ahead for these global mega trade deals, especially with the U.S. presidential election quickly approaching?
And for more on this, Professor Kim Se-won from Ewha Women's University joins us in the studio today. So good to see you.
Pleasure to be here.
All right, so Korea has been keeping its eyes on the TPP and RCEP for a while now, as these trade deals help to break down those barriers when it comes to global trade. So can you tell us more about the significance and also the scale of these two deals?
Well, TPP and RCEP are mutually competing multilateral free trade agreements, and these are led by two economic superpowers of China and United States, respectively. And TPP is led by U.S. and Japan, and it includes 11 countries and covers almost 40% of global GDP.
Wow.
RCEP is led by actually China and South Korea, and it includes 16 countries and covers 30% of global GDP.
Now, let's first talk about the China-led RCEP then. I mean, what's causing the delay here?
Well, actually, all negotiations of RCEP were supposed to complete it by the end of the last year, 2015.
Okay.
But meanwhile, there was serious conflicts of interest over the problems of South China Sea between member countries, particularly China and ASEAN member countries like Philippines and Vietnam. So that was the main reason of delay.
Now, I think the bigger problem here is, though, that the troubles, if there are more troubles in concluding this RCEP deal, then there could be more troubles for other deals led by China.
Well, actually, China is building up two multilateral FTAs against US-led TPP. One of them is RCEP, and another is FTA-AP. That means Free Trade Area of Asia-Pacific region.
Okay.
And that is something upgraded and ultimate form of the APEC. And that covers 21 countries and covers even more, 50% of the global GDP. So that's the another multilateral FTA led by China.
Now, the U.S.-led TPP, this deal is something that U.S. presidential candidates are opposing.
Right.
So why are they against it, and what are the chances of seeing the U.S. Congress ratifying it within this year?
Well, both of the U.S. presidential candidates have serious concerns about the benefits of TPP on U.S. economy. But one thing very particular of this year on U.S. presidential election is the position of the international trade policy has been switched between Democrats and Republicans. As we know, Republicans became extreme protectionist. On the other side, Democrats are relatively became the defender of the free trade.
Right.
But both are against the TPP. So the U.S. Congress ratification will be delayed until next president.
All right. Well, at this point, I'm wondering, what are your thoughts on multinational trade deals in general? I mean, do you think they are effective in boosting trade and economic growth for countries that are involved?
Well, in 18th century, actually, Benjamin Franklin used to say that no country was hurt by more trade. So that free trade philosophy has been widely accepted by many. But according to recent studies and careful studies, we have to separate the effects of the free trade between long run and short run. In the long run, of course, we have a positive effect on economic growth. But in the short run, when we import more goods and services from foreign countries, that substitute domestic production, and that destroyed part of the domestic industry in the short run.
But IMF Chief Christine Lagarde actually warned against countries resorting to neo-isolationism. Right. So what kind of difficulties would countries see if these mega multinational trade deals fall through?
Well, actually, the size of the global trade has been decreasing very seriously after 2008's economic crisis. Actually, the last year was the worst, with over 10% decrease of the global trade. So as we seen from the case of the Hanjin Shipping and Hyundai Shipping, the Korea is the most affected by this. So the failure of RCEP and TPP will decrease the global transactions and trade, and that even decreased the economic growth of the many countries.
Now, you talked about Korea just a little bit, but Korea has been one of the strongest proponents of free trade. So this kind of news is nothing but bad for Korea, I think. So how should Korea prepare for potential negative effects that could come from these delayed deals?
Well, as we talked about many times before, Korea is simply the most foreign-dependent country. Export is over 40% of the GDP, and import is about 40% of the GDP. But in the case of Germany, it is about 30%, and in the case of Japan, it is only 20%. So we need to pursue the completing all the negotiations of the RCEP as exercising the power of mediator between member countries. At the same time, we need to join the TPP since we are not member of the TPP yet.
And also, I guess, lessen dependence on exports.
Exactly.
Right.
So that for the purpose, we need to increase domestic consumption and investment together.
All right. Thank you so much for your insight today, Professor.
My pleasure.
And that brings us to the end. Thanks for watching, and we'll be back tomorrow with more at the same time, same place for your Business Daily. Until then, goodbye.